Never say goodbye. Not even gravity can pull you down. You're the wild, the way, the crowd. You reach the skies, no one dares. In your hands, the future's got all nowhere. Nothing know what the hell were you thinking? You laugh as the odds daylight blinking. Every day's a quest, not from disguise. With James in the storm. All right, get ready to do this. The dream never dies. Oh, come on, you little fucker. Stop. All right, we're done with that. What's this? 26? Holy cow. All right, we're going to do Yahoo Finance. Yahoo Finance, there it is. We're almost ready to roll. Almost. There we go. Going to be with you guys in a second. Okay, come on. And there we go. Alrighty. Good evening, everyone. My name is James. This is Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow. Simple, safe, predictable, consistent 1% per week. Yes, I know 1% a week is over 50% per year, and I'm perfectly okay with that. Seriously, I'm perfectly okay with 1% every single week. Is what it is. Oh, we don't want that account. We want that one. There we go. All right. So, what we're going to do, why isn't this one working? Oh, that's why. All right. So what we're going to do tonight is you are going to give me some stocks to take a look at. I'm going to put them into my little rigmarole, whatever you want to call it, and see, do they qualify for what it is that I'm doing? Now, I'm looking for a simple, safe, predictable, consistent 1% per week. Who do we got down here? Hey, all right. Okay. The one and only Meow. All righty. Okay. Whatever. I'm not going there, but all right. So, who do we have tonight? What's down here? Chat. Nobody in the chat yet. That works. Okay. Let's keep on going. All the way back here. Who do we have tonight? What's that? Quincy? Ash? Cause and Astra. Yeah, what's happening, Cause? Dan, the Circle Man, Ardenez. Okay, Scarlett. How you doing, Scarlett? Big Papa. Ooh, I love it when you call me Big Papa. Gotta love that one. ARB, JB, what's going on? Hustle 24/7. Rocco's in the house. Dom, Little Simon. Monkey Business. Phil, good evening, Phil. Heather, Ellison, okay. Howard, Joey. Sin, EL, okay. Slurg, that's interesting. Enza, how you doing? Waylon, oh well, okay. Mark Stuckey from Ohio, how you doing? Truth or Dare? Really, don't play that game with me. Sorry, dude. I'm not a child. I don't like doing that. You can't make me. Melvert, evening Melvert. Joey Seahart. BP Banari wants to take a look at Apple. Danny, good evening, young sir. I like it, young sir. Okay. We're having issues with Instagram. Why are we having issues with Instagram? Pause due to poor connection. I find that rather strange because the modem is literally 6 feet away. All right. BJ, all right. Visa, we'll take a look at that one in a minute. Danny, how you doing? Mystic Dragon, Scott Hackler, good evening. Eric, EL, Estee Lauder, oh, cool. We'll take a look at that also. First on the list was Apple. First come, first serve. Apple it is. Let's do this. AAPL, Apple. Every time I do this, I'm looking for the same 5 things. 5 things. You ready? Here we go. 1, the high of the year. Number 2, where is the low of the year? Number 3, where were we a year ago? Number 4, where are we now? And number 5, what is the motion of the ocean? Up, down, up, down, up. Okay, simple enough. Before we move on, what do the numbers look like? Now, I'm not going to give you any quotes for this week because we got, 2 or 3 days left. Let's jump in and take a look at next week, which would be the 10th of April. Right there. Okay, so if I'm buying it at $253.79, $253.79, $253.79, $253.79. Okay, fine. If that's what it is, the 255s are going for $385. So that works for me. And what does Apple usually do? Apple just nice, straight and steady upward trend every single year. Looks like the teacher who curses 24/7. Thank you. Not quite sure how to take that, but okay. Rylan Grubbs, how you doing? Okay, I'm having a problem with this one. Okay, all right, so let's zoom in. What's the last 30 days look like? Are we looking for something? Okay, down, up, down, up, down, up. Okay, let's check it out. The 250, 250s. Yeah, that one looks better. So let's try that one. Get out of that one. All right, I'm just not going to do this one anymore because it's just not working. And now. Nope, not going to do that. Okay, let's see if we can get this thing working. Live. There we go. Let's see if it works. Okay, maybe it will, maybe it won't. All right, so let's do this one right here, AAPL. Okay, first thing we're going to do is we're going to change it from single stock option to the covered call stock option. That way we can find out, I want to jump in, I want to jump out. I don't want to stay here all day. I don't want to stay here all week. Okay, so covered call, there it is. And we want to look at the 250, 250. There that is. And here's the order right there. I want to change it to just one contract. That way it makes it easier for you guys to figure out how many can you do. Here we go. You ready? Buy one, covered call, Apple. Right to it. Right to it. Why not? 10 April 26. That's next Friday. So that means I'm going to buy the stock first thing tomorrow morning. Sell somebody the right to buy it from me. Listen closely. I'm going to sell someone the right to buy it from me for less than I paid for it and still walk away with a profit. Yeah, think about it. I'm going to buy it. I'm going to turn around and sell it for less than I paid for it and still walk away with a profit. Remember, my goal is 1% every week. All right, so buy one covered call, AAPL, 10 April. That's next Friday. The 250 call option. Well, the stock at the moment is at 253.79. So how can I possibly walk away with a profit? Hold on. Covered calls are awesome. So let's get out the calculator to see what my rate of return is. Now, for most of you, you're probably thinking of an annualized rate of return. Put my money in, a year later, what do I get? Sorry, I don't do that. I don't play that game. I do weekly cash flow. So I'm going to invest usually on a Monday or a Tuesday and hopefully be out by Friday with 1%. Yes, I know 1% is over 50% for the year, but max profit, $396. We're going to divide it by the cost of the trade, including commissions and fees. Okay, so let's do this. All right, calculator. 396 is the profit, and we're going to divide that by my investment. And my investment is 24,854. 24,854. All right, that brings it up to 1.6. 1.6% for 1 week. Now, I know you guys most likely understand the math. 1% every single week is going to be more than 50% per year. But what's 1.6%? 1.6% every week. Well, I'd like to get that. So we're going to save this one. Be the first one of the day. Every day we look for five halfway decent companies. They're not suggestions and they're not tips. They are observations. You guys are giving me stocks to take a look at it. I put it through the ringer, so to speak, for the strategy that I'm using. It would be best if you understood where I'm coming from. I'm 62, which means I'm retired. Most people think I retired at 72 or 67 or whatever. I retired at 59 because I wanted to. And I had enough money to be able to do that. All right, so let's see. The first one of the night is going to be Apple. Let's save it. Before we do this, let's do this. And put in Wednesday. Here we go, Wednesday. And change that color again. White, there we go. And here's Apple right there. Oh, is that big enough? Woohoo! Yeah, doggy. All right. Apple, 10 April. That's next Friday. Uh-oh, got a camera that went off. Got a camera that went off. Why did that camera go off? Uh-oh, nope. Uh-oh. Camera that went off. Let's try it again. The 252 call option. Here's the profit, 396. It's 24,854. Now, anytime you make any investment to get some type of rate of return, you got to put some money up. So if I'm putting up 24 grand, I'm making 1.6% for this week. Now, 1.6% every week is going to be more than 70% by the end of the year. But you know what? I'm perfectly okay with 1% a week. All right. 1.6 for Wednesday. First one on the list. 1.6. Apple. How can you go wrong with Apple? I mean, really. Come on. It's Apple. Okay, we're not having any luck at all with Instagram. I might just have to get rid of Instagram. All right. So that was Apple. What else do we got down here? Charles, how are you doing? Cool beans. Nobody there. No questions. No questions. No questions. All right. Ty Miles. Okay, I can't read that, dude. English, please, if you don't mind. So let's go back, see what else we got. Enza, see you there. Scott Hackler, Mystic Dragon. Susan. Eric wants to take a look at Estee Lauder. So let's take a look at Estee Lauder. Let's get rid of all this stuff. Now, Estee Lauder, I have done it a couple of times, only because the numbers look really good. Not something I want to get on a regular basis. Let's take a look at this thing. Here's the high of the year. The low of the year, where was it? Where is it? Down, up, down, up. Well, that looks pretty damn good. Okay, the high is here. She drops, profit taking. Now she hits the bottom and turns back up again. Well, that's what all stocks do. Okay, once people take their profits, stocks drop. They get to a certain point where people like me and some of you saying, wait a second, $65 for Estee Lauder? That sounds like a deal. But before we move on, what is it paying? Okay, so it's currently at 71.77. So the 72s are going for 275. Now, right off the top of my head, that's about 3%. Think about it. Estee Lauder, it's coming off of, let's zoom into that so you can see it better. It's coming off of a big drop. Finds the bottom yesterday, right there, and today is the first day up. Now, I like 2 days to the upside, and on the third day, I will jump in. I mean, I've been trading for 30 years. Not once have I ever picked a bottom or ever captured a top. So I just don't even bother anymore. I jump in as she's bouncing off the bottom. I grab 1% every single week, and that gives me over a 50% return on a weekly basis. And I'm pretty much okay with 50% a year. Okay? It's not guaranteed. There's only 3 guarantees in life. All right, nobody even here yet. Okay. Oh, could that be why no one's here yet? Could be. Okay, so I think there's that possibility. Give me 1 second while I do this. Only at 36%. What are you kidding me? All right, I need a little bit of privacy on this one. All right, going to give me a little bit. A little bit. All right, let's do that. Slide all the way down. Let's do that. Come on. I should have done this earlier. Sorry, guys. Just got to quickly do this. Invite all these people on my email list. Okay. Almost there, almost there. One more. There we go. There it is. And there, and there you go. And off to the races you go. All righty. So let's get out of there. Come on. There you go. Thank you. Now let's plug back in. There we go. You guys don't need to see that stuff. Now that's weird. I'm hearing noise in the background. Where's that coming from? All right. Anyway, that's still loading. Okay. All right. Sorry about that. So next, what we're looking at, Estee Lauder. Okay, fine. Let's take a look at Estee Lauder at 72. Why not? All right. See, honest question. Why not? All right. So let's get rid of this. Change it from single to covered stock. The 72 right there. Slide on down. Just one contract. Just to make it, comfortable. Not too uncomfortable. Here we go. One covered call, Estee Lauder. 10 April. That's next Friday. The 72 call option. The stock is currently at 72.72. So, again, second time tonight, I'm selling for less than what I paid for it and still walking away with a profit. Yeah. Yeah. A lot of you saying, that doesn't work. Yes, it does. Believe it or not. All right. 355 is the profit. 6,800 is the investment. Get that calculator over here. Here we go. 355. We're going to divide it by the investment, which is 68.45, and that comes a grand total of. Are you ready for this one? Now, this is why I did Estee Lauder before. Now, remember, I'm buying it, hypothetically speaking. Now, I say hypothetically speaking because these numbers here are all going to change first thing in the morning. But by going by the numbers that are here now, it gives you an idea how it works. Okay, so in the morning, what am I buying it for? 72.81. What am I selling for? 72. I'm selling it for less than what I'm paying for it and still walking away with, you ready for this? 5.1% for 1 week. But here's the caveat. Here's the glitch. Here's the catch. Whatever you want to call it. You have to like the company. You have to say, you know what? I'm okay with buying Estee Lauder at this price and holding on to it. You either like the company or you don't. I got 5 simple rules. And rule number 1 is never buy anything you do not want to hold on to long term. If you don't understand it, you don't want to get married, walk down that matrimonial aisle and say, yeah, I'll buy it and hold on to it until it hits my target and continue to do a covered call every single week and pick up cash flow every single week. There's 52 weeks in the year. If I can get 1% every single week, why the hell not? Think about it. A good quality company that's consistently profitable, has weekly options, And it's at the right time to buy. It means it's dropped to the bottom and it's bouncing up off that bottom, heading up. It's a very simple strategy created for a 9-year-old little girl. Because in 2008, all right, hold on. We're going to save this one. While we're doing that, I'll continue to explain. In 2008, when my daughter was 9, would you believe she's going to be 27 this year? Do I look old enough to have a 27-year-old daughter as my youngest? She's my youngest, 27. Ugh, the thought of it, 27-year-old. Anyway, where are we? Right there. Estee Lauder. Let's take a look. There it is right there. And here we go. Estee Lauder. EL. 10 April. That's next Friday. Okay, if I'm buying it, currently it's at $72.98 after hours. I'm going to sell it for $72, pick up $355, and invest $6,800. So here's the thing. When I invest $6,800 into this stock, that is mine to do with as I please. And that's only for 100 shares. Because to do a covered call, you need 100 shares to sell one contract. Well, great. Well, the 100 shares has cost me $6,800. The one contract for this week is selling for $355. So yeah, that $355 goes in my pocket first thing tomorrow, as soon as I sell it. And then if the stock is above 72 come next Friday, whoever bought this option, gave me that $355, will take the stock away from me. And guess what? I get all my money back. Well, not 100%, because I am losing, 98 cents per share. But I'm losing 98 cents a share on the stock, but I'm gaining $355 for the option. And if it doesn't hit 72 by next Friday, I can turn around and sell it to someone else the following week. Every single week, I can sell it over and over and over again until it hits my target. Well, my target is 72. It's currently at 72.98. It's just got to stay where it is or go higher. Stocks only go 3 different directions. Well, actually, they only go 2 directions. They go up and they go down. But if they go up, down, up, down, up, down, it kind of like looks like they go sideways. They don't really go sideways, but it does look that way sometimes. So 5.1, hell yeah. I like me some Estee Lauder. But here's the funny thing. Tomorrow's Wednesday. All right, Wednesday already. So that means I've already have all my money invested, because all my money gets invested by by Monday or Tuesday. Femi, can you explain this strategy, please? Okay, Femi's a simple strategy. Okay, you buy a good quality dividend stocks. What I like, Femi's, I like the Dividend Kings. That's 5 decades, 10, 20, 30, 40, 50. 5 decades, Femi, of increased profits. The Dividend Aristocrats, 25 years of increased profits. Dividend Champions, again, 25 years increased profits. Now, the rules for the Dividend Aristocrats and the Dividend Champions are just a little different. But still, they both have 25 years of increased profits. Then you get the Dividend Contenders. 10 to 24 years of increased profits. So, is the company profitable? Yes or no? Well, we check every week. This week is 10,934 companies that you can invest in. 10,000. That's a lot. So, how do I pick mine? I pick mine with 2 criteria, and only 2. But that's me. I'm a little bit different than you guys. Okay, if you're looking to strike it rich overnight, this ain't it. This is definitely not get rich quick. You do not have to sit in front of your computer all day long. It's a 5 or 10 minute strategy. It's simple, it's safe, it's predictable, it's consistent. All right, so let's get rid of this one. and pick up another one. So we got 2 so far. Let's find out what do we have. What do we have? What do we have? What do we have? Have. What do we have? What do we have? What do we have? Have. All right. Alrighty. That's weird. A lot more people, which is kind of strange. So you know what I think I'm going to do with YouTube? I think I might close it out and then redo it. Okay? So don't go anywhere. I'm just going to close this out and reboot. Got to reboot every once in a while. It keeps the algorithms guessing. Done. Okay, so let's do another one. And next. And there we go. And there we go. All right, so we're going to reboot that one. All right, so what do we have next? All righty. All right, Eric wanted to look at Estee Lauder. Freedom ETD. I have no idea what that means. But you want to look at NEO. Okay, I'm a little leery about NEO. And, okay, NIO, NEO. Okay, never heard of it. And there's probably a good reason why I never heard of it. I don't know what it is, nor do I care, because it's not on my list. Okay, well, here's the high, here's the low, here's where it was, here's where it is. It went up, down, up, down, up, down, up. Okay, what's going on there? It's at $6. Okay, last 30 days. Okay, I'm going to say no right off the bat because I don't like this. Look at this. Okay, it's too close to the high. 603 right there and 620 is right there. There's not enough room for it to move for me. Sorry. Cam, Carnival Cruise Line. How you doing, Cam? All good? Check that out. Nice. I like that. High, low, was, is. Nice. So what do the 26s look like? 94. That's over 3%. If you like Carnival Cruise Line. It's always going to come down to that last one, isn't it? Okay, this camera's not working. Why is this camera not working? Now, I'm kind of curious. Why am I hearing noises? I shouldn't be hearing noises. Damn. All right, let's do this one. Okay. Sit tight. We're almost there. Okay. Next. And it's not made for children. There we go. All right. Here we go. That being said, next on the list, Carnival Cruise Line. All right, all that looked good. Let's zoom into that, see what that looks like. Looks like a new trading range. Down, up, down, and blah. Ugh. Okay, 2 days up right there. The 26s, 94. Do you like Carnival Cruise Line? It's an important question. Okay, so let's do it. Carnival Cruise Line, 26. Okay, covered call. There it is, the 26. There that is. One contract. And here's Johnny by one covered call, 10 April, that's next Friday, the $26 call option. Look at this. The stock is currently at $25.98. Oh, $25.98 by $26.08. This is the third time I'm buying something, turning around, selling it for less than I paid for it. That just makes no sense, doesn't it? When is the last time someone ever told you, yeah, you buy it, sell it for less, and make money off of it? Well, let's find out. All right. Carnival Cruise Line, 10 April, 26 call option, 99 is the profit, 2,500 is the investment. The investment gets lower and lower. But I'm not really concerned about that. I'm looking for consistency of profitability. That's what I'm looking for. All right, so calculator. 99 is the profit. 2501 is the investment. That comes to a total of 3.9. Oh, hell yeah, 3.9. Why the hell not? While that's loading up, let's get rid of this. 3.9. I like 3.9. Works for me. Now, are you going to get 3.9 every week? No. I've been doing this now, I've been investing for 30 years. I've been doing this strategy for about 15, 16, 17, 18. I don't even know how long. Well, here we go. Carnival Cruise Line, 10 April, 26 call option. 99 is the profit, 2,500 is the investment for, what was that? 3.9% for 1 week. When's the last time you got 3.9% for 1 week? 3.9. What nice numbers. Next. What do we have next? All right. Ooh, Midwest 33063. Question is, if the stock drops below purchase price, do you hang on to it or sell it? Okay, I'm going to say this again slower because apparently you weren't listening. Rule number 1, never buy something you don't understand or you do not want to hold on to. Basically, what that means is if you take a good look at any stock, doesn't really matter which one it is. Okay? One of the very first things you're going to see is the low of the year, 15, the high of the year, 34. That, my friend, is a 50% difference between the high and the low. Okay? The high, 34, the low, 16. That's a 50% difference. But look at the other way. 16 and then it jumps up. That's more than a 100% increase. So you really, really have to understand the numbers. So when I say never buy anything you don't understand, that's rule number 1. Rule number 2, simple. Never sell at a loss. It defeats the purpose of the game. And if you think this is not a game, someone's been lying to you. What do we have on there? Nobody's even there yet. Oh, that's weird. Elvin's in the house. I see you there, Elvin. How you doing? All right, so keep that in mind. So let's zoom in, see what this, wait a minute, we've already done this one. Let's find something else. Heats. If the stock falls way below your cost basis, how are you doing covered calls each week? Ooh, see, the interesting thing, Heats, is I believe you asked me this the other day, and what did I do? I went in specifically to find exactly what you're talking about. You ready? Right here. Now, I'm not 100% sure if you can see it or not as a white background, but let me explain it to you, okay? Macy's. I got 1,700 shares of Macy's at $22. Well, right now, Macy's is at 18. Okay, so I am down 19% on Macy's. Down 19% on Macy's. I bought it at $22.01. This week, I sold the $18 call option for 20 cents a share. Not quite 1%, but pretty damn close to it. It brought me in $340. Whoopie-doo. Okay, so anyway, next one. Kohl's. I got 4,000 shares at $15.67. Right now, Kohl's is at $12.90. This one makes me a little nervous. It's at $12.90 at the moment. So yeah, I'm down 21% on Kohl's. But this week, I sold the 13 call option. Okay, it's at $12.90. I sold the 13s. So yeah, I'm keeping my eye on this one. Now, I'm not going to roll it into next week. I'm going to want it to expire, and then next week I might do the 1350s or the 14s, depending on where it lands. But I'm still down 20%. But I sold the 13s, picked up 16 cents, which is over 1%. So even though my stock is down 20%, I still brought in over 1%. That's my goal. Consistently 1%. Okay, number 3, Hertz. Now, Hertz is only down 12%. Okay? I get 17,000 shares at $5.11. I sold this week's 450s, and Hertz at this moment is at HTZ. Hertz at this moment is at 461. I sold the 450s. So I have to roll that into next week and maybe adjust it. But I picked up 2,700 off of that one. Okay, next one. SMR. Got 2,600 shares at 13.12. Okay, I'm down 21.5%. I sold the 11 calls this week. Okay, I bought it at 13. I sold the 11s, which is less than what I paid for it by about 21%. Now, the 11s that I sold, I collected 16 cents a share, which is more than 1%. I see that one. Okay, and last, IONQ. You're going to like this one. IONQ. I got 2,500 shares at 37. Okay? Now, I'm down 29% on IONQ. 29% I'm down. But I sold this week's 28s. So it's IONQ at today. IONQ 28. Oh, shit. It's at 28.83. So I got to deal with this thing tomorrow morning because I'm not going to let it go at 28. So first thing tomorrow morning, I'm going to adjust that, roll it forward, change the numbers a little bit. But this week, I did pick up 47 cents per share. And that's over 1.25% for a week. So I picked up close to, well, over 1% out of all of them combined together. And I made the money that I'm looking to make. So I'm not really worried about it. I stick to my rules. Never buy something I don't want to hold on to. Never sell at a loss. Make sure the company's profitable. Make sure they have weekly options. Okay? And never selling at a loss. So, what else do we got? So, hopefully they answered that question. Okay, Heats. Did that answer the question? I just showed you 5 stocks that I personally have in my account. Each one of them is down over 10 or 15%. I got one of them that's down 29%, and I'm still making 1%. See, I don't have a problem when stocks go down. I don't know who's making that noise, where that noise is coming from. It's weird. Okay, all right. La 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 la. Okay, so Heats, Midwest. I both answered both questions. If stop drops to your covered call price, does it auto sell? No. Danny, when you have what's called a covered call, I buy the stock, I own the stock, it's mine to do with as I please. When I sell a covered call, now I can't do anything with the stock until that option expires. So whoever bought that option, it is their prerogative to exercise it anytime they want. Now, they could if they want to, but we don't know who bought it. We don't know what they're looking for. Are they looking to get the stock at a discount? Are they looking to double or triple the money just by playing with the options? I don't know. All I know is I bought it for a certain price. I sold someone the rights to buy it from me at a certain price by a certain date. And the certain date for me is about 5 days. That's it. I like to buy on a Monday, sell on a Friday. GTG, sorry. Okay, I can deal with that. All right. So hopefully that makes sense. All right. Jin Clay, noises such to me talking to myself. I don't listen to you enough. All right. You're assuming buying at a current price for a covered call. What's the cost basis of your stocks? Okay, I just showed you what it was, so I'm assuming that text is a little late. TikTok star, how you doing? Ben, SLI, bet on rare earth. Okay, I'm sorry, Ben. I have no idea what that is. SLI, hell no. Sorry, you're new here, so I'm going to cut you a little bit of slack, but I don't do monthlies. Let me explain. April, May, July, October, November. Those are months of the year. It means I can trade them once. That's 12 times a year. Okay? So how can I get weekly cash flow from a monthly option. I can't. I don't do monthlies. They just don't work for me. Sorry. It is what it is. Yeah, I understand, Ben. Heats, never sell a loss, no risk management. Okay, I'm not quite sure what you mean by no risk management. Okay? People buy stocks for a certain reason. Now, before you came here, you probably never heard of buying for weekly cash flow. I've never heard of it. Okay? Now, I'm not saying that I invented it. I'm just saying I've never heard of it. It wasn't until my 9-year-old says, Daddy, can you teach me, that I had to figure out something for her to do that was safe, predictable, consistent, and no way for her to lose. Okay? It is what it is. Okay, Ishmael Moore, dude, I haven't seen you for a long time. How have you been? Nice to see you back again. Nick Pera, how are you? Heats. If you do your covered calls below cost basis and your shares are called away, that's a loss. I'm going to agree with you 100%. Okay? If you would like, you can more than happy to bring you on down and take a look at every single position I bought and every single position I took a loss on. You will find 0 losses this year. And do my stocks that called away? I think 1 got called away this year. We are just finishing up the first quarter. The second quarter starts tomorrow. I have 0 losses so far this year, and I have 1 stock that called away from me. That's it. I look at my positions every single day. Yes, Heats, I'm aware that INOQ doesn't pay any dividends. Doesn't that break your rules? Yep, rules are made to be broken. Every once in a while, I will stray off the line. But for the most part, I usually stick to it. If the share price drops 20% or more, you just keep it, even if the fundamentals and sentiment changes. Absolutely. I stick to my rules, especially the first and the second one. The first rule is never buy something I don't want to hold on to. So am I okay with holding on to INOQ? Yeah. Am I happy about it? Not necessarily so, but I have no intention whatsoever selling it for less. And yeah, it's down 29%, and I still made over 1% this week, even though the stock is down 29%. Are we facing a lot of assignments this Friday? Not me. I don't like my stocks getting signed away unless there's no more profits to be taken. Let me explain that one if I can. Okay? So, if I buy a stock at $3 and she slowly goes up, that gets to a point where you cannot sell covered calls anymore and make a profit. At that point, I let it go. Because at some point, the premiums that come in just are not worth it. The juice is not worth the squeeze, however you want to put it. Okay? So, let's see who we have over here. Derek OC Pig. Okay. Zach wants to take a look at Microsoft. MSFT. Look at that bounce right there. High, low, where was it? Where is it? Up, down, up. It's a little tiny bounce, not a huge one, but it's still there. Let's zoom in. Last 30 days, down, up. Here's a 30-day top. Bottomed out yesterday. So ask yourself the question. It goes from 415, drops to 355. Now she's bouncing. She's at 370. What's the 370 going for? 725. That's over 2%. And it's Microsoft. Microsoft has 25 years or more of increased profits. It's one of those few companies that when it pops up, it's a hell yeah, as long as the numbers work. If I'm buying it at 370, I'm selling the 370s, picking up 725. Okay, let me say that again to see if you all get it. Okay? The current price, $370.17. $300.17. Then I'm going to turn around and sell it for $370. $370. 17 cents less than when I paid for it. But I'm collecting $7.25 per share. Let's see what those numbers look like. Let's get out of here. Let's go to covered call. The 370, there it is. One contract. That way you can do some math in your head, thinking to yourself, oh, you know what? I can do 5. I can do 11. All right. One covered call, Microsoft. 10 April, that's next Friday. The 370 call option. The profit, 538. The investment, 36,000. Ouch. Well, what do you expect for a $300 stock? Sorry, $370 stock. All right, let's take a look. Calculator. Profit, 538. Investment, 36,462. Comes to a grand total of 1.5%. Okay, it's 1.5%. But do you like Microsoft? Does it make sense to you? It's always going to come back to those 5 questions. Does it make sense? Do I like this company? Okay, do I like this company at this price? Am I willing to hold on to it, never sell for less than what I paid for it? What the hell happened here? That goes over there. This is number 4. Uh-oh. Microsoft, 10 April, 370 call strike, 538, 36,000, and it's 1.4? 1.5. Okay, I can do 1.5%. Why not? 1.5. Next. Adrienne wants to take a look at Hewlett-Packard. Who do we have over here? Okay, Everett, how you doing? CJ, how you doing, CJ? Nice to see you. Okay. All right, David Miller, I see you there. How you doing, brother? Can you please take a look at O? Holy cow. I can tell you no right now for O Realty. O is O Realty. It's a monthly. It's a hell no. I don't like monthlies because they just don't pay enough. But I'll look at it for you. Okay, here we go. You ready? Here we go. Here's the high, 68. Here's the bottom, 50. We were at 58 last year. Dropped, shot up, back down, back up. Okay, great. I don't do monthlies because they just don't pay enough. Sorry, Elvin. Okay, April, May, June, September, December, January, March, January. Yeah, I don't do monthlies. But you're still new, Elvin, so I'm going to cut you some slack. Okay, who do we have here? Sirius XM stock. Okay, I got that one. Ooh, here we go. Sarah, how you doing? Enoch Built, SMCI. Hell no. Why? Okay, hold on. You got to be new here, but we're going to take a look at SMCI just for you. SMCI. Okay, so we're going to pull up SMCI. Who wanted this one? Enoch Built. Okay, Enoch Built. Are you ready? Here you go. Super Microcomputers, SMCI. Now, let's see what kind of dividends this company pays. Because after all, it is a dividend investing channel, so we're looking for stocks that have dividends. Are you ready? Look at that. SMCI has no dividends. So the question I have for you, how am I going to make weekly cash flow on a company that doesn't have dividends? Why would I? They don't share their profits. Now you understand what the dividend is, right? The dividend is a portion of it's a small portion of the profits the companies give back to the investors. And that's us. We buy the stock, we sell the stock, we are investors. We are entitled to a portion of the company's profits. So if the company doesn't share profits, well then how the hell am I supposed to know when it's going to move? Who's that? Bulldog, MPLX. What the hell is that? MPLX. Let's find out. MPLX. Well, at least they have dividends. Let's see how many dividends they have. And let's see if they're consistently increasing. Terry wants to take a look at DraftKings. Are we facing assignment? Nope. Andrew, juice not worth a squeeze. That's right, Andrew. Mr. Winter, we'll take a look at NBIZ in a little bit. Okay, sit tight. All right, so MPLX, very first dividend was in January 2013. Okay, it's 13 years. Now, I like 2 decades, which is 20 years. But we'll give you the benefit of the doubt and look at this one has 13 years. Very first dividend, 17, 27, 28, 29, 31, 32, 34, 35, 38, 41, 44, 47. Well, I'm liking this one. Do you see that? Each and every dividend is higher, higher, higher. Hold on. We stopped out at 2015. Okay, let's keep on going. 2015. Okay. 50, 50 and a half, 51, 51 and a half, 52, 54, 56, 58, 60, 61, 62, 63, 64. Holy cow! This thing is consistently I like this one. Every single dividend is higher and higher and higher. Now, granted, it's only 13 years. Should we let it go? I don't know. Let's keep on going. 68.8. Stalled out. Okay. 68.8. 2020, 2020, 2020, 21, 21. Yeah. What happened there? I was excited for this one. Now it's stalling out. Okay, hold on. 128. Okay. Dropped to 70. 77. 85. 95. Okay, I like this one. Even though it only has 13 years of dividends. Okay, let's pull up the chart and see what it looks like. MPLX. Oh, shit. It's a monthly. No, thank you. I should have looked at that one first. No, that's probably why I never heard of it before. Bulldog. Dude, I don't do monthlies. I can't get weekly cash flow from a monthly option. Pays once a month. Why would I do once a month when I can do once a week? Can you explain? We already explained it. Mystic Dragon, Hewlett-Packard or Hewlett-Packard. Let's find out. Okay, we looked at that one. We're going to take a look at Hewlett-Packard in a minute. Freedom wants to take a look at Nike, NKE. That's on my list. I like it. Look at that right there. High, low, is. Down, up, down, up, down, up. Okay, 52.82. We dropped down to 48. The 48 is going for 520. But why? That's an honest question. Why? Okay, the last traded price today was 52.82. Okay, a nice little jump, 52.82. But after hours, 47.99. Something happened, so I'm going to say no until I can find out what happened with Nike. It was at 57, now it's at 48. Why? Mystic Dragon, HPE or HPQ? HPE. Nope. HPQ. Maybe. Let's try that one. Okay. The high, the low, where was it? Where is it? Down, up, down, up, down, up, down, up, down. Okay, it's going down at the moment. Why is that? Down, up, down, up, down. Nope. Sorry. HPQ and HPE are both going to be a no. Clips. Up on NVTS over 100% on option contracts, and one for SoundHound AI up 800%. That's not a question, that's more of a statement. Good for you. Can you explain the strategy? Absolutely. Buy a good quality company, sell it just before the EX date. Get in, get out, grab yourself 1%. That was pretty easy. Farmer Dan, you sold Kohl's at $13.50 and I paid $15.90. Now what do I do? Well, you shouldn't have sold it for less than what you paid for it. Farmer Dan, you've been here long enough. You heard me say over and over and over again, never sell for less than what you paid. If you paid $15.93, why the hell would you have sold it for $13.50? It's an honest question. Seriously, it's an honest question, Dan. If you bought it at $15.93, why would you sell it at $13.50? Now, I bought Kohl's too. Hold on a second, Dan. Here's my Kohl's right here. Okay? I got 4,000 shares at $15.67. Okay? I sold the 13 calls this week. No way in hell am I selling it for less than I paid for it. It just ain't happening. I will take that profit every single week, but I refuse to sell at a loss. Here's a fun one. STRC. Oh, okay, wait a second. All right, we got some questions over here. Sit tight over there. We're going to get to those in a minute. MPLX, we already said no. Kenny. AG is the Schnitz. Comex will default. The Meek silver stickers will inherit the earth. Not quite sure what that means, but okay. Mr. Winter, NBiz. NBIS. Nubius Group. Okay. High, low. Where was it? Where is it? Up, down, up, down. What's going on there? Let's zoom in. Okay, down, up, down, up. So she's going up right now. She's at 103, but that's only one day. That's only one day up. I want 2 days up, and on the third day I'll jump in. So this looks like it could be a good contender for Monday. The 103.76, the 104s are going for 535. Holy cow, that one sounds good. Sounds so good, I'm going to write it in my book for Monday. NBiz, N-B-I-S. Danny, when you say you're selling it at X price, who decides that it sells? All right, Danny. There's a few rules that are rules. Okay? Here you go. Rule number 1. The bid, the ask. If the market maker. Now, you may think, you may wish, you may pray, you do it anything you want, but it's not going to happen. Here's the thing. You got one person. Only one person you can buy from, and only one person you can sell to. That's it. You cannot sell to me. You can't sell to Nicholas. You can't sell to Bill. You can't sell to Kenny. You can only sell to the market maker. The market maker buys, sells. If it is marked on here, if the price is advertised, just like in any store in the whole United States, if the market maker advertises the price, he's got to fill it at that price. It's called market order. Now, there's a difference between a market order and a limit order. The limit order is saying, this is what I want, and I'm not willing to pay any more. I'm not willing to take any less. That's a limit order. This is what I want. That's it. Now, a market order, that's an American order. I love American orders. Market orders, give it to me now. I don't care what the price is. That's a market order. Hey, Mighty Bargain, how are you doing today? So think about it. And who buys it? Who decides? It's the market maker. If it's listed for sale, he is required to fill it at that price. Okay? Now, if you do a limit order, it's hit or miss. Mr. Winter, thank you, did that one. Nicholas, we already did Nike. Double D, Coca-Cola. Now, I'm going to let you know that Coca-Cola, as good as it is, I may have bought it 3 times in the last 30 years. The reason being, look at the price, 76. Okay? When the 76s usually don't give me more than 1%. But this week they are. Look at this. They're giving 109. All right, well, let's take a look right there. Let's zoom in. Here's the top. Here's the bottom. Here's where it was. Here's where it is. Down, up, down, up, down, up. Okay, it's doing exactly what I want it to do. Okay, 30-day high, 82. 30-day bottom, 74. Now she's sliding up, and she's sitting at 76.05. The 76 is going for 109. Let's do Coca-Cola. We all know who they are. I wish I can teach the world to sing in perfect harmony. I like to buy the world a Coke and keep it company. I don't know how many people actually remember that song. All right, the 76s. Covered call. There we go. One contract. And here's Johnny. Buy one covered call. Coca-Cola. 10 April, which is next Friday. The $76 call option. Now, this is the fourth time tonight I'm showing you 76.17, and I'm turning around and selling it for 76, which is less than what I'm paying for it. So think of it this way. Okay? Stocks go up, down, or basically nowhere. So if I buy it at 76.17 and the stock goes absolutely nowhere, I make my money, okay? I make my profit, the premium, and then I get my investment back. If the stock goes up, I get my money back, I keep the premium. If the stock goes down but still stays above 76, I still get all my money back and still walk away with the profit. The only time I should be concerned is if it drops below 76. Then I got to ask myself that question. This company's over 140 years old. They've increased their profits for more than 5 decades. Okay? It's been around for longer than I've been around, and it more than likely will be around long after I'm gone. So do I like Coca-Cola? Am I willing to put my hard-earned money into Coca-Cola? It's a yes or no. You either like it or you don't. Let's take a look at the numbers. Okay? If 102 is the profit, I'm going to divide it by my investment, which is 74.98. And that comes to a grand total of 1.36. Still over 1%, right? 1.3. This is number 5 for the night. That's it. We found them all. Holy cow, we're only at 10 o'clock. We found all 5, and it's only 10? Ooh, no. Wrong one. Wrong one. There we go. I hit the wrong button. So this is number 5. Here it is right here. Coca-Cola. One covered call. Coca-Cola. 10 April. Next Friday. The 76 call option. The stock is currently at 76.17. My profit 102. The investment 7,500 for a 1.3? 1.36. Okay. I can do with that. 1.36. 1.3. Gotta love it. That's all 5. Let's grab a seat, answer some questions, see what you guys think. Okay? Bill, CLSK. Never heard of it, Bill. Let's get rid of this. Let's get rid of that. Let's get back to where we were. And Bill wants to take a look at CLSK. Clean Spark. Interesting. I don't know what you're thinking here, Bill. Look right there. Dropping. Is it bouncing off that bottom? Could be. Here's our last 30 days. It bottomed out yesterday, and today, 1 day higher. If you like it, why not, right? Cam, thank you for that. Have you You have requests on TikTok. Thank you there, Phil. Evening, James. Happy Tuesday. All right. Daniel, we just looked at Coca-Cola. Mystic Dragon, VFC. VFC. Interesting. Okay, same thing. There's a top. What's going on right there? Mystic Dragon, what's going on? Same thing. Drops, here's the bottom, shoots up, pulls back. We got 1 day up. 1 day. When it goes over 13, what are you doing? I'm assuming you're talking about my covered call that I sold the 13s on. Well, more than likely, I'm going to roll it into next week, letting itself a 14 and take a 2.6 loss. Hell no. Never, never, never. I don't take a loss if I don't have to. And I have 0 losses so far this year. Zero losses so far this year. And I'm okay with that. Shankela, how are you? Chris Foti, also, what if they shoot up big time, like Kohl's goes to 15 and you're selling it at 13? Well, I like to think that I put, what do you call it? One of these, right? All right, watch the screen. I go right over there, right click, come down and create an alert. Okay? And I can put an alert number right there. So if the stock goes above 13 or 14, okay, I will get an email, I'll get a text, and I'll get something right on my screen. But what if it shoots way past it? Does it just roll it far as possible? See, Kaz and Astra, I had to roll one. Remember last April when old Trumpy boy said tariffs, 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 and the stock market dropped like a rock? Yep, I got 4. Count them. 4 margin calls. That means I had to pony up a big fat chunk of change, but I didn't. What I did is I took the positions that I had and I pushed them forward. I had to push one of them forward 6 months to avoid a loss. I refuse to take a loss. Refuse. KJ, he just explained he will roll them over tomorrow and keep his shares. You have control. Absolutely. Thank you, Cajun. It won't pay. Now, I'm terribly sorry, dude, but yeah, it does. Now, you're new here, Chris. You really are. I appreciate your interaction. I really do. He won't make 1%. Anytime you want, Chris, to go one-on-one, I will show you exactly how I do it. Yeah, but you can't always for credit. Yeah, you can. Okay? It just all depends on what you want to do. I can drop the strike price. I can push the strike date further out. I can do whatever I want to do. Heats, do you own? Hell no, hell no, hell no, and hell no. Heats, come on, dude. Do you even look at the numbers of those things? JEPQ, JEPI, no, GPIQ, never heard of it. So let's go find that one out. Never heard of it. So let's find out. I know that JEPQ and JEPI are crap under my opinion, under my rules. Okay? GPIQ. GPIQ. Let's find out. All righty. Here we go. Okay, so GPIQ, I'm going to say no right off the top of my head. Okay, now, who came up with this one? Heats. The reason I'm saying no to GPIQ, the very first dividend was in December 2023. You do know that's a little over 2 years old. Now, I'm not quite sure how to address this one. Because I don't want to insult you, but I feel like you need to be insulted. Why are you putting your money into something that's 2 years old? The first dividend was December 4th, 2023. So you got 2024, 2025. All right, it's not 2 years old. It's 2 years and 3 months. 2 years and 3 months, and you're putting your money into this. Let's check out the numbers. 37, 38, 39, 40, 38. That's backwards. 40, 42, 41, that's backwards. 41, 41, 41, that's backwards. 43, wait a minute, 43, 42, that's backwards. 43, 41, that's backwards. 38, 38, that's backwards. 41, 35, 44, 44, 45, 47, 46, that's backwards. 46, 45, that's backwards. This thing goes backwards almost as much as it goes forward. So why would I do that? Seriously, look. It's at 38, goes to 41. Then it drops down to 44, 45, 47, 46, 46, less than, yeah. No. You put your money where you want, I'll put my money where I want. So GPIX. Okay, let's take a look at that one. GPIX. Same thing. December 2023. 30, 31, 31.6, 32, 33, 31, backwards. 32, 33.6, 33.8, 34, 34.7, 34.3, that's backwards. 35, that's backwards. 35, that's backwards. 34, that's backwards. 32, that's backwards. 32, that's backwards. 33, 35, 35, 36, 36, 37. Okay, 37, 37. Okay, so no, I have no idea. And you know what? You can do whatever you want. Seriously, you can. Honestly, you can do whatever you want to do. When you ask my opinion, am I willing to put my money into a company that's 2.5 years old and not consistently profitable? Okay? Consistently profitable means it's higher. Dividend after dividend after dividend. It's either profitable or it's not. Plain and simple. Mr. Strong Vision. When the covered call comes in on Friday, does the stock option expire? If you want to do a covered call again, you got to redo it again. Okay, no. Stock options do not expire on Friday. They expire on Saturday. But your ability to make adjustments ends at 3:59 p.m. Because at 4 p.m., stock market's closed and you lose access to that position. However, that position doesn't expire until Saturday. So you better make sure that all the numbers are in order before you walk away. Because, yeah, options expire on Saturday. If you still own the stock on Monday, you can sell another covered call on Monday. It's just that simple. Okay? Every single week. Okay, if you buy a position that you like, Apple, AT&T, IBM, Home Depot, Lowe's, Dell, Intel. If you buy a company that you like, you can get weekly cash flow if it has weekly options. If it doesn't have weekly options, you got to pay attention. Hold on. You got to pay attention to this stupid thing. Okay? Now, I've sat in front of the computer for hours watching that stupid thing, looking for a breakout, looking for a signal. Yeah, no thank you. I've gone past that point. I'm past that point in my life. Okay, so what else do we got? Eric, we'll take a look at that in a minute. Then you play the game of holding it and hoping it drops again. Not 100%. Okay, Cause and Astra, you've been here long enough, dude. You have. You've asked me over and over again. You give me a hard time because you like to. And you're saying that I cannot get it. Well, I do. Okay? I refuse to take a loss. Literally refuse to take a loss. So if I got to roll it 2 weeks, 3 weeks, 4 weeks, 5 weeks to avoid losing, I will. Okay? I won't make my 1%. Okay. Let's do this. One more. Is that the right one? No, that's not the right one. Here we go. All right, what do I have? Chris, this is for you and Cousin Astra. You ready? We're going to go over to my website, the 10-Minute Trader. This is my old one. My son's making me a new one. Come up over here to the hamburger. Click on that right there. We're going to come to Weekly Trades 2024. Right there. All right, so hold on. Here they come. Here's all the social media. We'll get past that. And here's my accounts. This is for 2024. 74%, 63%. This one only made 33%. But this one was only 6 months. So 33% for 6 months. Okay, so here's all the trades for the year. Okay? That's every single trade, every single stock. That's the profit and loss statement. Come down a little bit further. Okay? Here's all my positions. Okay? The green is the buy, and the red is the sell. Oh, I'm going to prove that I'm human. No, I'm a meat popsicle. I'm not human. There we go. Okay, so over here, the timestamps. Okay, timestamps. What kind of strategy it was, how much the quantity, what's the stock symbol, what's the strike price, was it a debit or was it a credit? Every single trade for the last 2 years, 2024, the complete year, 2025, the complete year. Not only do I have all the trades listed, hold on, YouTube, let's go. Hold on, YouTube. We all love YouTube. Okay, look at this. 1,900 different videos. That's a lot. Okay? So, every single day for the last 2 years, every single trade I made publicly so that you can see as a video and has a, what do you call it? Trade sheet, profit and loss statement. Every single one. And yes, Cousin Astra, I do usually make about 1.4% on average every single week for the past 15 years. Believe it or not, really don't care. Get out of that. Okay, right there. Let's go back to where we were. Next. Yeah, but you can't always for credit. Yes, I can. Chris 40. Then you play the game of holding it and hoping it drops again. Okay. Wait. Who is that? Chris 40. Chris, Chris, you ready? All right, Chris, you ready? I got $100 bill right here, Chris. If you can tell me one stock that did nothing but go up or nothing but go down. Never, ever, ever. I've been doing this for 30 years. 30 years. Never, ever, ever have I ever seen anything drop straight down or go straight up. They do the same thing over and over and over again. Okay? They go up, they go down. They go up, down, 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 up, down. That's all they do. They go up, they go down. That's it. They don't come to your house and make you dinner. They don't take the dog for a walk. They don't dump the trash. They don't mow the lawn. Stocks go up. Stocks go down. That is it. They all drop. They all go up. Every single one. I've never, ever, ever seen a stock that went straight down, and I've never seen one that goes straight up. It just doesn't happen. Okay? $100. Chris, you can name me one stock that went straight up and didn't pull back. Name me one stock that went straight down and didn't bounce up. One. Just one. What else do we got? Kenny, thank you. Thank you, Kenny. What else we have over here? All right. Yep, Heats. Already talked about that one. No. Chaz. Reconnecting. Damn it. Okay, that's done. Because it can continue down. Yes, Chaz, it can continue down. But look. The low of the year here is way over here, 950. It shot up, it came down, it went up, it came down, it went up. It didn't go all the way down. The NASDAQ, TER. Oh, sorry, dude. Up, down, 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 up, down. Sorry. Went up, it went down. Unless early assignment. Yes, Phil, you are 100% correct. Early assignment can happen anytime. You bought last August. Way to go, Kenny, last August. Holy shit. At 100, now it's at 340. Nice going, Kenny. But here's a question for you, Kenny. When are you going to sell? Because it's not a profit until you take it. Eric, IBM. So I'm assuming you're not going to take that. I didn't think so. Put my $100 back. Because continue down. It only goes down for a certain amount and then it stops. All right, G4, Netflix. Give me a second. IBM. Here's the top. Here's the bottom. Here's where it was. Here's where it is. Up, down, up, down, up, down. What's going on right there? Last 30 days. Okay, here's the bottom. Shoots up, pulls back. Oh, we got 2 days to the upside right there. Get the top at 260, drops down to 232. Okay, Monday was higher. Today is higher. 242. The 242s are going for 555. Not quite 2%, but still, it's IBM. You either like it or you don't. And it's that simple. You either like it or you don't like it. Adrian, how you doing? Hey, Blue 22. How you? 420. Sorry, Blue 420. How you doing? Daniel, Mosaic, M-O. Gotta love Mosaic. You do. But it looks like it's stalled. Look at that. The high and the low. Where was it? Where is it? Down, up, down, up, down, up. What's going on there? Looks like it just stopped. Hey, here's the high at 70. Drops to 63. Goes from 63 to 67. Now it's pulling back. It's just pulling back now. That's all. Maestro. Dude, I haven't seen you in a while. Nice to see you back again, Mr. Maestro. Oracle, O-R-C-L. I love Oracle. I actually have some. And yes, my Oracle is down also. But am I panicking? No. Oracle has great premiums. Okay. 340 is the high. 120 is the bottom. Okay. She went up. She went down, up, down. What's going on right there? What's happening here? Your last 30 days. She shoots up, pulls back. Yesterday is the bottom. Today is 1 day to the upside. So this is a perfect opportunity for Monday. So I'm going to write Oracle down for Monday. Written. Okay. IBM. Where it said no to IBM. Okay. Altria. Oracle. Ooh, Preston. Johnson & Johnson. Now, Preston, I bought Johnson & Johnson once in about 20 years. Once. Okay? 244. The 245 is going for 340. I'm losing a buck. I'm getting 240. Yeah, I'm not getting 1%. Because if I buy it at 244, okay, I can't sell at 242s. I'm only bringing in 475. And then I lose 250 off of that. By that time, it's no longer any good. And then the 245s, well, yeah, that one would work, but the stock has to go up. Okay. Farmer Dan, you sold. Now what do? There's nothing you can do once you sell something. Hey, Mighty Bargain, how you doing? All right, Johnson & Johnson, sit tight. Earnings were today on Nike. We already looked at Nike a little while ago, Chris. Okay, we already looked at it. I forget what the numbers were for Nike. But we already looked at Coca-Cola too. All right. I sold the call. So now what do? Okay, so Farmer Dan, I can't really tell you what to do unless I see the whole picture. Okay? See, anytime I look at anything, I want to know 5 or 6 certain things. A picture is worth 1,000 words. I mean, we've heard it before. Picture's worth 1,000 words. Okay. What did you buy it for? What did you sell? Where's it at now? Where does it look like it's going? and what should you do? It's 5 simple questions. What is it at? Well, that's a simple one. What'd you buy it for? Okay, second one, what'd you sell? Well, that should be relatively easy too. Where's it at? Well, that's pretty easy also. What you going to do? That's the tough one. Preston, did you consider less than 1% when it's a short week like this week? Absolutely. Because look at it this way, Preston, 1% a week is over 50% per year. But 0.5% per week is still over 26% by the end of the year. Ronald Smith, PHM, that's Pulte Group. PHM, Pulte Group. Top, bottom, where was it? Where is it? Look at this. Up, down, up, down, up. What's going on right there? Okay, look at the top. That's the high of the year. From the high of the year, 144, we dropped down to 114. Now we got 1 day. 1 day bouncing up. Now, I don't get too excited for 1 day bouncing up because I want 2 days to the upside, and then on the third day up, I will jump in. NYSE, also known last August, 2120. All right, not quite sure what that means. Enoch, AAPW, never heard of it. AAPW. Apple Week Pay ETF. No. I don't do monthlies. Okay? Monthlies are very challenging. Number one, you got to try to expect where it's going to go in 30 days. Okay? Number one. This here, move my chair. This here is 30 days. Okay? Down, up, down, up, down, up, down, up, down, up. Great. Now tell me where it's going to be the next 30 days. Because 30 days ago, we're at 37.50. Today, we're at 34.42. Well, tell me, where's it going to be in 30 days? And then, the 17 right there, that's only 2 weeks away. But still, what are we collecting? The 35s are going for 0. No. I'm pretty sure it's different than that. But no. Preston, did you consider less? We already did that one. Thoughts on PHM? We just looked at Pulte Group, PHM. Didn't we just do Pulte Group? PHM. Yeah, we did. Pulte Group. Okay. High of the year, bottom. Now she's bouncing up. Okay. I like 2 days to the upside and then on the third day. Some comments, okay. Mighty Brain. I remember the Coca-Cola jingle. You do? All right. Oscar's house. How you doing? Hayes, why you don't go over 1% premium? Hayes, that's a great question. Here's the thing. Hayes, I've come to the point in my life where 5 or 10 minutes of my time for 1%, simple, easy, predictable, consistent, that's over 50% per year. 5-10 minutes a day. That's it. I'm perfectly okay with 50% return per year. I'm okay with it. Okay? Now, could I get more? Yeah, I could. If I wanted to sit in front of the computer all day, no thank you. You get to a certain point in your life where you say, you know what? It is what it is. I don't need to sit. I don't need all the money. I don't. Okay? No, don't get me wrong. I'll take it, but I'm not going to chase it. Okay? I would prefer to sit and watch the grass grow. Really, I would. La, 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 la. Okay, so here we go. It's only monthly. Okay, G4, Netflix, NFLX. Ooh, check this out. The top, bottom, where was it? Where is it? Up, down, up, down, up. Right there. New trading range. Look at the last 30 days. That looks nice. Up, here's the top at 100, drops down to 77. Now she's going up. The 96s for this week go for 221. That's over 2%. If you like Netflix. No? No comment? If you like Netflix? All right, here, we're going to reboot this one. Good. Good evening. Macy's. We'll take a look at Macy's Little. Thank you, Blue. Chris, thank you. What was 100 reference to me? I have no idea. I think you understood my question. Misunderstood, I don't know. Blue, good, bud. Hope you're doing well. Blah, 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 blah. Okay. All right, so we're going to reboot on this one because the numbers just look terrible. Oh, wait a second. Numbers look terrible. So anytime we get terrible numbers, we reboot. Here we go. Reboot. All right. 1 second. Live. There we go. Go live. There we go. A couple more seconds. Hold on. There it is. Move this. Oh, whoops. Do that. Mirror the screen. Come on. Mirror the screen. There we go. And there we go. All right. Now, what do we have over here? What do we have down here? Thank you there, Kenny. King Solomon, how you doing? Wow, this frame rate really blows. I get better focus on a N64 game. Good for you. Thank you. Bought Cirrus today. Nice. Scotty, how you doing? You should buy a better camera before buying stocks. Professor Moderator, thank you for that. Scott Whitty, are you filming underwater? Absolutely. He's on the Titanic. How'd you guys guess? You should go to Coke bottles and somehow make it that you can turn them into camera. You might get better focus and quality. Why, thank you. That's so nice of you. Very informative, not acknowledging my comments. Professor Moderator, thank you. See, Professor Moderator, you're under the opinion that the world rotates around you. Terribly sorry, dude. I got 9, wait a minute. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 cameras. You're only on one of them. And terribly sorry if I don't put you at the top of my list. But you haven't said anything halfway decent yet. Scott Whitty, you should invest in DGME. What the hell is that? DGME. DGME. We can't find that symbol. So, no. Rob Densmore. A report by Financial Times, a financial advisor at Morgan Stanley acting on behalf of Hegseth attempted to invest millions of dollars into BlackRock's defense, blah, 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 whatever. It's not Joey. So if I'm right, investing isn't a short game, it's a long game, and the longer you invest, the more you'll get out of it. Okay, I like that idea. It's a good one. What do we have here? This one's all done. No more there. Over here. Okay, what's your analysis on Robinhood stock? HOOD. Now, Robinhood stock has not been around for 20 years, and I don't think they have 20 years of dividends. So it's not really one that I do, if at all, at often. Okay, so here's the top, 151. The bottom's at 30. We shoot up, we pull back, and we have 1 day. 1 day up from that pullback. Here's your last 30 days. She shoots up, pulls back, 1 day up. We're at 69.30. The 69 is going for 305. That's over 4%. Which tells me there's no dividends. When they give you a nice fat premium, there's usually no dividends. But if you're okay with it, fine. What else we got? Doe Fryer, how you doing today? Thank you, Blue. Wave, there you go. All right, VTI sucks. Okay, thank you. All right, what do we have here? All right, we already did Netflix. James, when you do buy right, do you do market or limit? Terry, I do market order. Only because I'm an American. I want it now. See, when I do a buy right, okay, hold on, let me do this. I'm going to show you this for a second. It's currently at 69. Let's do the 69 right there. All right. Terry. All right, Terry, you ready? Here we go. This is a covered call, also known as a buy right. Okay. Now, if I'm buying 100 shares, I'm selling one contract. Now, the nice thing about doing them both together at the market, okay, as soon as the market opens, let's hit confirm and send. Okay, now remember when I said earlier, I want simple, safe, predictable, consistent 1%. Remember that? Simple, safe, predictable, consistent. Okay, so when I say simple, the easiest strategy is just buying. But there's a major flaw with just buying. Because once you buy, you own it. Great, wonderful. Where's your profit? You don't get a profit until you sell something. Unfortunately, it's just the way it is. You don't make any money until you buy something and then sell it. So the easiest strategy is just buying the stock. Now you have to wait for it to move, and then you decide where you want to get off. It's like jumping on a bus that has no destination. You never know when you're going to get there. So the covered call, I know exactly what I'm buying. See, I buy it first thing in the morning, $69.70, and then I sell it. My maximum profit's already there. I know what my profit's going to be, and the stock doesn't have to move at all because I already know what it is. It's right there. My investment, 66, the profit, 287. So when I do a buy right, I know exactly what my profit's going to be before anything happens. And then I decide whether or not I want to do it. When you buy a stock, well, you got to wait. And I have no desire to wait. I'm impatient. I'm an American. I want it. I want it now. I don't care what the price is. Seriously, I don't care what the price is. Is the company consistently profitable? Do they have weekly options? Is it right time to buy? When I say is it the right time to buy, I'm looking at the chart. Chart goes up, chart goes down. It tells me what you guys are doing. I know what I'm doing, but what are you guys doing? What are the other buyers and sellers doing? Are they buying? Are they selling? Are they accumulating or are they dispersing? The numbers tell you what it's doing. So if I'm buying it at the current price, $69.30, and then I sell it for $69, which is less than what I paid for it, I'm making $287. That's my investment. I'm making money on something that I'm selling for less than what I paid for it, but I'm still making over 1%. Imagine that. Okay, I'm buying it. All right, never mind. I did it like 4 times. Selling it for less than I'm paying for it and still walking away with a profit. I showed you 5 of them this evening. That I'm buying, selling it for less than what I paid for it and still walking away with over 1% profit. You use margin and don't have protective put. Please explain that. Okay, Hertz, you ready? I use margin, I don't have puts. Okay, let me see if I can explain it a little bit better for you. Rule number 1, never buy something you do not want to own or you do not understand. So I know what the high and low is for the year. I know what the stock is doing. I have a good idea what the numbers look like, or I wouldn't be buying it in the first place. Rule number 2, never sell at a loss. If the stock drops, big deal. I refuse. I'm going to say it slower so you really understand. I refuse to take a loss. I do. Okay, last year I had 2 losses. The year before I had 4. Okay, this year, 0. 0 losses so far this year. And I trade 7 different accounts. I must do at least 200 or 300 trades a week. 200 or 300 trades a week, and I have 0 losses this year. Dell, user 329160 wants to take a look at Dell. I forget what I was doing with Hood. I do, I forget. Don't get old. It's no fun. All right, Hood. Now we want to look at Dell. Whoops. Dell. D-E-L-L. All right, Dell's going to be a no. That was quick. Look, the high of the year right there, now it's dropping. Yeah, no thank you. Sorry. You suggested G-O-O-W. I never said G-O-O-W. Never. I have no idea who the hell that is. Okay? You can go through, I have over 1,900 different videos on YouTube, basically showing every single trade that I do. And you will not, I repeat, you will not find me doing any monthlies. Those numbers just don't work for me. Never, ever, ever have I done a monthly. No, I don't. I just don't do monthlies. They just don't work in my favor. So, no. So it wasn't me. It must have been someone else. Okay, G4, we looked at Netflix. Eric, 3M. Wow, I'm getting too many questions. Thank you, Blue. Thank you, thank you, thank you. Enum, hi. How are you? Is it possible to trade stocks on CFD weekly successfully? Sit tight. 3M. Here's the top. Here's the bottom. Here's where it was. Here's where it is. Look, down, up, down, up. What's going on? It's dropping from the top, from the high of the year, 177. We dropped, shot back up, back down again. Not this week. Maybe another week or two for 3M. Enza, how you doing, Enza? You use margin. Okay, got it. Waterbender, will tech stocks go down again? Of course they will. Holy barbecue. Nope, I don't do GOOW. I just don't. Redneck guy, VTI is less than desirable. Got it. It's Dr. Okay. D. Lovett, SMR. I do have SMR. Okay, so take a look at SMR. Okay, here's the high. Here's the low. Here's where it was. Here's where it is. Look at this. Up, down. Yeah, I think I jumped into this one at 20. Now it's down to 10. So yeah, quite down. So anyway, at 1084, it's dropping. Not really any rhyme or reason to where it's going. Okay. Drop, 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 drop. Yesterday is the bottom. Today's only one day up. Now, I don't get too excited, when it drops, finds the bottom, turns around for one day. I want 2 days, and on the third day, I'll jump in. That's me. You have to make up your own mind. What makes sense to you? Because what's right for me may not be right for you. I'm 62. I'm retired. I have no desire to go back to work. Okay. Jay Beard, we're going to take a look at that in a second. Okay. Enum wants to know CFD. Never heard of it. CFD. California Daily Tax-Free Income Fund. There's no options, so I can't give you any advice on that one whatsoever. Sorry. Dealey. What's happening, Dealey? Bryant, good evening. Bryant, that's all I need to hear. Bryant, I wasn't quite sure what it is you needed to hear, because I've been talking for about 2 hours. Simone. Hello, Simone. Josefina, how you doing? Jay Beard. Oh, Jim wants to take a look at Intel. I love Intel, INTC. I actually have some Intel. I do. Here's the top. Here's the bottom. Here's where it was. Here's where it is. Up, down. Not this week. Sorry. Have you looked at advanced micro devices? I have 200 strike 17 DTE sell put options at the money. Okay. Well, let's take a look. AMD, Advanced Micro Devices. Here's the top. Here's the bottom. Here's where it was. Here's where it is. Look at this. Up, down, up, down, up, down. Okay, it's at 203 at the moment. You got 17 days to expiration. And you got which one? The 200 strike. Did you buy or sell? It's an important question. Oh, DTE sell put option at the money. Okay, 200. Vertical, I don't want vertical. Okay, the 200 put at the money, 17 days, right here, 17th of April. The 200 put is going for 735. If you like advanced micro devices, okay. I don't see anything wrong with it if you like it. Are you a long-term investor? Now, Bryant, Juggernaut, it depends on what you mean by long-term investing. So I've been investing for 30 years, 3 decades. So you could say I'm a long-term investor, but the longest I've ever held anything is 18 months. That's it. Macy's. Let's take a look at Macy's. Look at this. We got 15 minutes left. Here's the top, the bottom. Where was it? Where is it? Up, down, up, down, up, down. Okay, not quite what I'm looking for from Macy's. Okay, 30-day high. It drops back up, back down. Just one day. Doesn't thrill me. Sorry. Jim, Chevron, CVX. Hell no. Why are you buying at the high, Mr. Jim? Okay, you buy low, sell high. I didn't say you didn't. Wrong guy. All right, sorry, cause somebody's using your name. SMR. DJ Flawless. How you doing, brother? Haven't seen you in a while. I feel like you need serious capital for this strategy. What's the cheaper, safe option? The cheaper, safe option is probably the exact same thing my 6-year-old grandson's going to do. He's 6 years old. Guess where he finds money? He looks in the ashtrays. He looks under the seats. He looks between the cushions. Yeah, and he finds pennies, nickels, dimes, quarters. Okay, so how much can a 6-year-old come up with? So between me, the ex-wife, the in-laws, and then my son and my daughter-in-law, that's 6 of us. So there's the 2 grandparents, and then there's the 2 parents. That's 6 people. So if I take whatever change I come up with on a weekly basis, I only have 1 grandchild at the moment, so he gets all of it. But when I get more grandchildren, it's going to be split up between everyone. So the cheapest and easiest strategy, I would say, would be dividend capturing 2.0. That's where you're looking for the dividend before the EX date. You jump in, jump out, and just keep on moving. You in NVAX? No, I'm not. XRP is not a dividend stock. Sorry. First Drive. When selling a dividend stock, how do you account for the slight run up in price prior to the EX date? You do know that's the main reason why I do dividend stocks. I'm going to say this slower because this guy, never heard of him before. Hold on. First Drive. This is his first time here. I never heard of him before, and he's saying exactly how I came up with the strategy. He says, when selling a dividend stock, how do you account for the slight run up in price prior to the EX date? So, First Drive, you do realize by knowing when a stock is going to move based on the EX date. Hold on. I'm going to give you a little bit of ammunition here. Come on. There we go. This is called an EX dividend calendar. He got it right on the right. Never heard of him before. Never seen him before. And he came up with the exact reason how I came up with this strategy. When selling a dividend stock, how do you account for the slight run-up before the EX date? This is an EX dividend calendar. You can put whatever stocks you want in there. I have about 350 stocks put into my EX calendar. It tells me when the stock is going to pay the dividend. 4 dates to remember. Date number 1, the announcement date. That's when the spokesperson comes out and says, hey, everybody, this is James from Dividend Stock. This is how much money we made. This is how you're going to get yours. This is when you're going to get yours. And everything's a little fun. Whatever. It's just the announcement date. It tells you what you want to hear, when you're going to get paid and how well they did. That's it. Date number 2. This is the important one, represented by these little tiny green dots. Each one of these little tiny green dots represents a company that is getting ready to pay their dividend. It's called an EX dividend calendar. So knowing that Medtronics is going to pay its dividend on the 27th, and today, well, that's March. We don't want March. We want April. Sorry, April. Give it a second. There we go. Clorox. Okay, we all know who Clorox is. We all know who Lowe's is. So if Lowe's is going to pay the dividend on the 22nd, and I want to collect that dividend, I got to buy it before the 22nd. The 21st, the 20th, the 9th, the 1st, the 10th, the 17th, the 6th, the 14th, as long as it is before the EX dividend date, represented by these little green dots. Date number 3. This is also an important one. Not as important as the EX date, but just as important. Date number 3 is called the date of record. Whoever owns the stock on the date of record is entitled to the dividend. Date number 4, payment date, that's just when you get your money. So he's right. How do you account for the fact that stocks have a tendency to go up in value before the EX date? So if you know when the EX date is, you know when the stock probably, potentially, systematically, consistently, predictably, whatever you want to say, has a tendency to go up just before the dividend date. By knowing that, coupled along with looking at the charts, okay, looking at the charts, it goes up, it goes down, and then it goes back up again. So the chart, the EX date, and the covered call. You put the 3 together, simple, safe, predictable, consistent, 1% per week. It was created for a 9-year-old. And this dude over here, he got it right off the bat. Never heard of him before. The first time he's ever come up here. When selling a dividend stock, how do you account for the slight run-up in price before the EX date? That's the key. And I've been trying to tell you guys that for the past 3 years. Anyway, JetBlue, no thank you. Holy moly, you suggest no. No, I did not suggest GOOW. No. I love GOOW, paid every Tuesday. Good for you. Tree Warrior. We got to be selling CCs for big wins this week. I'm going to agree with you. Tony, SYY. That's Cisco. That's a monthly. That's a no. Hayes, first you see yearly and then a monthly chart. No, Hayes, usually yearly, 90-day, monthly seasonality. I usually look at 4 charts. Ooh, excuse me. Okay, right there. Mamba, how you doing? M, yep, we did that one. CDFs are contracts for different like derivatives. Yeah, okay. You in NVAX? No, I'm not. XRP, not a dividend stock. Sweet Dan, he's in Eastern Standard Time. Thank you. J Beard, all right, thank you. G, myself, okay. SPXW, the best of ever. I'm going to disagree with you, but let's take a look. I like disagreeing with people. SPX. SPXW. SPXW. No results for SPXW. I'm going to say no. Thank you, Ribbon. You make a lot, I make plenty. Jay Bird, I do. I would be happy with 100 shares and would be fine holding 7 color content. Okay, thank you, Jay Beard. Gacy's, never heard of Gacy's. Yoit, we looked at Apple earlier. G, we already looked at Chevron. Mamba, Google only has 2 years of dividends. It's going to be a no. Cam, thank you. User 2968056090662. What the hell were your parents smoking when they named you, dude? Or dudette? I have no idea. American Airlines. Oops. American Airlines, you say? AAL. Okay. Here's the top, 16. Here's the bottom, 8. That's a 100% increase. Okay, bombs at 8, shoots up to 1650, drops. What's going on there? Last 30 days. Drop down, but 1 day up. Nope. Just give it some time. We'll get there. G, we already looked at Nike. G, A-G-I-G. What is that? A-G. A-G-I-G. Abundia Global. No. No options. No thank you. Okay. Thoughts on Nike? Sweet Dan, I looked up at Gacy's and couldn't find it. Jim, UPND. What the hell is that? UPND. No such thing there, Jim. UPND. Okay. King, are you using leverage? Absolutely, G. Ponozula. Brian. Dividends. Just create bag holders. You got to explain to me what the hell a bag holder is. You know, I'm looking for a bag here and I'll hold it for you, but I have no idea what the hell you mean by bag holder. Until the burp. I have no idea what that means. Gee, we already looked at Nike. 88 layers. ASTS. Interesting. Top, bottom. Where was it? Where is it? Up, down, up, down, up. What's going on there? Let's zoom in a little closer. Get a little closer. Here we go. 107. Down, yep, just 1 day up. Now, don't get me wrong. It's okay if you like it. But I like 2 days to the upside. Then I jump in on the third day. I'm sure he meant Casey's Midwest gas station. Okay. How can I find upcoming dividends? Len, come on. You've been here long enough. It's right there in the market watch under the calendar. Bryant, I think he means you have plenty of liquid capital available. Okay. Not quite sure what that means, but all right. Who do we have over here? All right. Do you sell puts or only sell calls? I sell puts, but I'm only showing one trading strategy. I know lots. Trust me, I know lots and lots and lots. Here's some trading strategy. You got the single, vertical, back ratio, calendar, diagonal, straddle, strangle, covered, synthetic, butterfly, condor, iron condor, vertical roll, collar, double diagonal, unbalanced, deep and wide. There's a whole bunch of different trading strategies. A whole bunch of them. I'm only giving away one for free. And that's this one. Simple, safe, predictable, consistent, 1% per week. Is the app behind you on YouTube? Yes, it is. I think that means you have plenty of liquid capital. Okay. Wow, I didn't know you also trade other than skating. Yes, I do. Thank you kindly. He sells puts sometimes. Absolutely. Colin Carpenter, I promise you there's no way you're doing 1%. The best investors aren't even doing 30% per year. Colin, I thank you kindly. I could not have been insulted by a better person. Thank you there, Colin. You almost doing 50%? Well, I did 68% last year. Holy barbecue. You're suggesting, no, I'm not. Phenomenal Phil. Been selling on TNA. TNA. Whoops. TNA. I'll tell you what dropped in my mind very first time I see TNA, but I'm not going to do that. Okay, 60 drops to what is that? 17? So 17 to 60, that's a nice run. Pulls back to 40. What's going on there? Does it really look like it's a good time to jump in? Nope. Another one there. No. Oh, wow. All righty. Sorry, UPBD. No idea what that means. XLU. What the hell is that? XLU. State Street. Okay. Top, bottom. Where was it? Where is it? Up, down, up, down, up. What's going on right there? Last 30 days, 42 million shares traded today. Okay, got a minor problem with this one. 870 Fitness. You ready? Watch it, David. Children are watching. I didn't say anything bad. Okay. I got a problem with this one. You ready? The high is 47. We drop down to 44. Shoot up to 46. Now, 44 to 46 is $2. Not a lot. Okay? But that's a 5% increase. Now she pulled back a little bit. I'd kind of like to know what's going on right there. Okay, we went up, hit a new high. Not a new high, but there, and pulled back. And I have no idea what State Street is. Okay, James, we already looked at American Airlines. Kay wants to take a look at now. Okay, 2 days up, but today pulled back. Why? It's such a simple strategy. I can't believe they don't think you make that. Cynical people are just cynical. You know, some people just, like to pee on other people's parades. See, the funny thing I find here, what's the difference between the EX date and the date of record? Okay, Mark, the difference between the EX date and the date of record. The EX date is the last day the stock trades before the dividend is paid out, which means you have to buy the stock before the EX date. Okay? The date of record is basically whoever owns the stock on the date of record is entitled to the dividend. Now, it may sound a little confusing, but think of it back up to the 1600s and 1700s, because the first dividend stocks were sold in 1602. So how do you figure who's entitled to a dividend? Because back in those days, they didn't have computers. They actually had books. Seriously, books. And the bookkeeper would see who owns the stock on the EX date. And then they would take that book and they would bring it over to bookkeeping. And whoever owned the stock on the date of record, the bookkeeper would open up the book and write a check to each person who owned the stock on the date of record. Nowadays, it's all computerized, so it's so instantaneous and quick. It's still there, though. Because think about it. In the old days, you had to write everything down. And when you write it down, great. Now that book went to the person who wrote the checks, and the person writing the checks, anybody's name who's in that book on that date got a dividend check. That's the difference. How is Macy's doing? We looked at Macy's a little while ago. And I believe Macy's is one of those I got to take a look at tomorrow. All right. We got no more time left. Let's zip through whatever questions we got left, and we're going to call it a day. Well, how are you doing over there? I see there. CJ, still around? Thanks for hanging out with me, CJ. All right. All right, so what more questions? Amazon. Amazon doesn't have dividends, so we're going to just ignore that one. Hey, Rod, how you doing? Thank you there, Blue. You suggest, okay, holy buckets and war is not over. It's just a bull trap now. Okay. You all just look on the S&P 500. Not me, dude. Hey, Rod, I made on Ford puts 1,000% after war news. Okay. Someone's going to do it. Okay, really? QQQI? No. Bloom Energy? No. Glencore, we're going to take a look at it tomorrow. It's past 11 o'clock, 9 to 11. I'm done. I just want to do the courtesy of going through the rest of the questions. I'm glad to see you too there, A-Rod. SPY, hell no. SPY is not consistently profitable. Profit, then investors. It's about cash flow and compound interest. Thank you, Cajun. Fausto Aguilera, how are you? Thoughts on shipping stocks? Maersk, Hapag, and Lloyd. Good night. See you in the morning. A-Rod, do you know how to get GEX Gamma? Where the hell did that go? Okay, Fulcrum, gold. Don't get me wrong. Some people like gold. I don't. Only reason I don't like gold I know, weird, right? The only reason I don't like gold, it doesn't give me a weekly cash flow. It gives me no return whatsoever. And I know that for a fact because I actually have some gold. And never, ever, ever has anybody knocked on my door and say, hey, James, I got your dividend from gold. Nope, doesn't happen. What about, oh, hell no. MU tomorrow? Mela, how you doing today? We'll take a look at MU tomorrow. Thoughts on Nike? We looked at Nike already, G. Oh, it's going to be a no. It's a monthly. We already did Nike. MU tomorrow. You buy high and sell higher? Hell no. Thoughts on NVO? Ooh, I have NVO. Just paid dive and near 52-week low. Yes, I'm well aware of that. I have NVO. See ya. Hope you're all having fun. Absolutely. A-Rod, war will end. Absolutely. Oh, TSM, Taiwan Semiconductors. Hell no. Yeah, I see there Gramali. Hormel. Ooh, Dividend King. Like that one. PNT. Okay. Why do you wait until the third day up? Because I don't know if it's going up. Okay? See, I don't know. See, look. Bottom, 1 day up, 2 days up. Third day, nope. Look at here. 1 day up, 2 days up. Is it going to go up again? Don't know. Now, see, I've been doing this long enough, so I'm perfectly okay not getting the bottom. Because you don't always get the bottom. So I don't try anymore. Third day, then I'll jump in. Is what it is. Would you put your grandchildren in stock? Oh, hell no. I don't do monthlies. They just don't work for me. GoPro. Yay! All right. TSM, Taiwan Semiconductors. Love it. Did your eyeball come out yet? Zill, come on. That's inappropriate, dude. Okay? Nobody wants to be reminded of stupid mistakes they made in their past. Okay? But anyway, that's it. We're calling it a day. You guys have a great night. We're going to do this all over again tomorrow. Yay! So, we need some mood music. Safety and number 3 days up. Safe at back. Yeah, thank you. Here we go.
You dream in stars and dive into the deep, fixing the world while the rest of us sleep. Your heart set on giving, no matter.
All right, have a nice day, everyone.
Building your legacy through love and brain. Julie knows that fire in your soul, the kind of things the broken